This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. Sign up between now and the 4th of May to take part in the wallet token airdrop. Further details can be found on my Telegram. Hello everybody, welcome back. We're going to have a look at Bitcoin on its own individual merit, and we're also going to consider what the DXY might be doing at the moment as it reaches this area of what could be potential resistance now that would lead to at least a consolidation over the next couple of months, maybe throughout the summer, which could lead into something better for Bitcoin and crypto and stuff. I remember we were talking about, we often would refer back to the DXY back in the old days, and I remember back when the dollar was really sort of crushing down and hitting down towards these historical lows. I remember saying, look, it's very unlikely that it's going to completely collapse at this stage. I mean, it could, but I think it's unlikely. It's likely to turn around, and I always sort of thought that this year was going to be a bullish year for the DXY. And to be honest with you, I mean, it started off extremely bullish. I had a little flick through some of my old videos. Because I don't have an enormous amount of time. I've got one of my daughters is at school, the other one's having a little nap now, so this is my little tiny piece of time, so I couldn't really dig too deep, but I found one of my videos where I was predicting it here, so this is back in September, so I'll have a little play of this just for some extra brownie points. Yeah, on the long term, it's looking like it wants to continue with an uptrend. Now, on the monthly here, we are at some the 20 monthly moving average here. Big deal. We've not tested this since we broke down all the way over here, June, since the money printing really picked up into full force. So now it becomes more obvious, doesn't it, when we look at a chart like this, that things are changing. And not that Bitcoin and crypto can't pump while the DXY's pumping. Of course it can. I mean, it's held up quite well in all respects. It's held up quite well so far, despite the dollar going up in value since when did this big pump really start? Since June. So I mean, it's been doing okay in comparison to stocks, precious metals, and things like that, and it's held its value relatively well despite going into a downtrend. But I do feel as though next year is likely to be a bullish year for the dollar. So let's have a look at good old. So there you go. Next year will be a bullish year for the dollar. So that was what, September was it? So I think from September we did then go on to make a new all-time high for Bitcoin. So I suppose what I was saying is that we are predicting a more bullish dollar coming into next year, and obviously that's all seems to be pretty obvious at this point. But it doesn't necessarily mean that it'll add an enormous amount of weight to crypto. But the two do have a love-hate relationship, don't they? So we can see that the dollar, from September when I was making that video, right up until November where we made a new peak, the dollar was going up throughout that period, and then Bitcoin still went on to make a new all-time high. So it does, you can see that there is relevance to it, but it's not the be-all and end-all. But yeah, this year was, always going to have some more upside for the dollar, and what crypto does as a result of that. Well, I mean, yeah, you could say that the two are so linked at this point that they have no choice but to be correlated, but it's not exactly the case, is it? Like I say, we still went on to make a new all-time high from September when I was making that video about the dollar, and the dollar was going up, and it continued to go up from there onwards, right up until, yesterday when it reached pretty much a significant peak. So we'll get rid of that video now that you can all see how epic that prediction was. I'm only joking, guys. And now we can think about what this might mean now if we do come down to get a rejection. So first things first, indicators on, right? Indicators aren't the be all and end all, but they can often help a great deal. We're on the daily here, and what we saw is golden crossover here, retest of that. Again, this is going back to where we were making that video, wasn't it? And then we started to break out. Standard practice really in any chart. You get your golden cross, you get a retest of it, and then you continue onwards. What else did we get? We got a Ichimoku conversion baseline cross around here, which is still in play. This is only get cancelled out if our blue crosses the red or the or the cheeky spend touches price action. None of that looks like it wants to happen, and even if that is the case, doesn't necessarily mean that doesn't mean it's going to collapse back down into its own shadow. It just means that this particular trend is over, and that would likely correspond to consolidation. And I think we you know, that's what we're looking at now, consolidation, but probably not a great deal deeper than 99, you know, 50, and that would make sense because that comes down to our between our 50 exponential and simple moving average, which are around that 99 to you know, 100 basically. So you know, the dollar is still in its uptrend, and as I was saying on these last few videos recently, I mean, you can't really fight the Fed. You know, the reason it's going up is because of what the Fed are doing. They need to increase the dollar's strength in order to tackle inflation. It's a bit of a heavily manipulated chart, in all fairness, and with that in mind, you know, indicators do count for something, but this is, if anything, a buy the dip, and use this to buy the dip. We'll see what happens over the coming weeks, to be honest, how deep this correction goes, if it goes at all. I think it's likely to have a correction now, but there's obviously no signs of this letting up anytime soon. And if we just flick our attention over to the monthly, I mean, we can add another horizontal once this area is broken. If and when this area gets broken, turn off all these indicators and just think about it in a simple horizontal time frame. We've got peaks around these levels here, and that would be about a 106, and that would be our next level that we'll be looking to meet before a potential top. At the moment, this could be the top. It's quite early to say. It's a sort of pretty beast of a monthly, isn't it? I mean, it's probably one of the biggest months the dollar's had ever, really, or at least over the last few decades, definitely. You know, we're talking a monthly candle here. So, like I say, it doesn't mean that it's it's going to negatively impact crypto, which is why we should look at Bitcoin in itself. Now, Bitcoin is more correlated to effectively stocks at the moment, and stocks are not destined to do well in that market environment, especially throughout inflation, because they're not going to have as good at earnings as they would if people had more disposable income. People just situationally, people aren't going to be spending as much on things. All right, people are trying to conserve their money as best as possible because it's worth less and their overheads are more. You filled up your car recently. You know, I don't have a Tesla, but if you filled up your car recently, you will know. You know, if you look at your energy bill, you will know. And yeah, of course, food and stuff has gone up as well. I mean, it makes some difference, but you know, for the most part, you know, there's a huge slice of most people's income has been taken away over this just this year for all those kinds of events. So things for stocks are probably going to continue to go down, and the correlation between the Nasdaq and S&P and Dow Jones and just the general stock market as a whole will filter through to Bitcoin. So Bitcoin, again, you know, we were talking about this ages ago. This channel like this often breaks to the down. We are breaking down now, so we're thinking about lower levels, and it's realistic to think that. Now, you know, we could get picked up at any one of these, just as we have done in the past. So we're talking 37 is the first area, 35 second area, 32 second area, third area. My particular interest is around 31 because I do see Bitcoin as relatively strong despite what people might think, and buyers will step in at each one of these levels. I'm not looking for a horrendous calamity wick or anything like that, but you know, I've been saying for a couple of weeks now that obviously, or for longer than that, all this area has been bought out for me a while ago. 40,600, 35,000. That's the last time I bought Bitcoin on that wick. The next time we're buying it will be around 31,300, just a front run, just in the event that we do get a wick down into it that gets picked up. So those will be the areas. But you know, further down, there's a reason all these areas are marked off. Obviously, it's your $20,000 area. That's a significant one. Below there, we've got about 17 to 16, and then all the way down here about just around 12. So all of these are areas that you might want to consider, depending on how bearish you are. Again, I'm not particularly bearish, which is why I buy within zones on the way down. I'm not looking to go all in at the absolute low, because no one knows where that low will be. Remember, the DXY does play a role in the way that the Bitcoin and stocks are moving at the moment. And look, with all that in mind, Bitcoin's held up relatively well. Bitcoin doesn't have to worry about earnings or anything like that. Bitcoin effectively is like a commodity, isn't it? And with that, it's like people call it the store of value, the digital gold. It doesn't matter what you refer to it as. It's not going to suffer from people having less disposable income. If anything, we've got all these countries adopting it, and institutions taking it onto their to their balance sheet. If anything, it will get propped up better than a lot of stocks. Just take a look at Netflix, for instance, Snapchat. The lot, they're all coming back down to earth to a large extent. Doesn't mean that this can't. It just means that it suffers in a slightly different way, which is that this is seen as a more risky asset. But stepping back from some of these other stocks, for instance, it's you'll be better off buying the top of this than you would have been buying the top of Netflix, for instance. That's just one example of many. If anything, Bitcoin is just trending effectively with a lot of the major tech stocks. But again, what we're looking at here is not a good looking chart, but it's a chart that we have effectively expected a breakdown from out of this channel, and we're going to wait and see how low it can possibly go. If it goes lower than my order, then I would be looking for this area down here between 29,000 to be a major turning point, whether it's a huge bounce or huge breakdown. And this would be the major area that most people want to put their buys in, because historically you can see big bounce from here, a double bottom around here as well. So we would be on the first pass at least looking for a major bounce around this zone if we get there at all. Now, if we think about what we're seeing over here, MACD, the histogram has ticked up a little bit, but it's not great. It's not amazing. We've not really made any considerable lows, so there's no way of mapping out any divergence. The money flow index is turning up, so volume is trickling in to the up, which is good. On the 3-day, we do see some divergences, but it's nothing particularly good, and the histogram is ticking down, so that does look a little bit toppy and a little bit heavy. Weekly, we'll look at the weekly. I know it's Friday, but crypto runs on a 24-hour basis. We do see a trend line of support taking place on the RSI here. Again, is that anything to go by? Not really. What we see on the MACD turning down as well, so that doesn't look particularly good. And now we're going to go to the monthly, because effectively this is going to be the end of the month. Now, we've seen this a few times, and we'll just zoom into this one a little bit here. We've seen this a few times, getting support on the 21 exponential, which is what's happening here. So we nuked down into it, above it, nuke down into it, above it, nuke down into it, above it, nuke down to it. We're still technically above it. That level comes in at 38,000 flat, right? Closures below there on the monthly. On this monthly, if we do go down there today, close down there over the weekend as well, so we get both, I suppose, traditional markets with the CME chart, and we also have the spot closing soon. If we get closures below 38,000, it doesn't bode well, and you would be looking for a fair bit lower, to be honest with you. Now, like I say, my buy order's in at 31,000, but if we did come down to that 29,000, that's a 25% drop. There's not much to it, to be honest with you. And I know some people are getting frustrated, saying, "Oh, I thought crypto was supposed to be only up." And yeah, I mean, crypto does sometimes have periods where it does go only up, and I'm not saying that won't happen again. But for the moment, it's not only up, is it? It's up, down, it's everywhere but left. And these are the sort of things that anyone needs to get prepared for. For the most part, crypto does have large periods of boring, and this is just the Bitcoin chart. But you can imagine what altcoins did throughout this period. This is the beginning of your bull market, 2019, straight up, and then a very long, drawn out, boring consolidation that took place. Forget about the March dump here. Let's just think about what we were looking at. Major long period of consolidation, all the way from its peak over here. It didn't reach its all-time high again until 488 days. We're talking about 18 months worth of sideways action here, and with that sideways action from its previous high down to, let's just call it these candle body lows, a 54% range. Yeah, we did have a black swan event bringing it down 73%, but in the grand scheme of things, all of it worked out well in the end for the hodlers. And again, my entry point is all the way back down here when the bull market began again. That's where I went hard and heavy. But it's not only up. you know, it's not only up at all. That's a 18-month period of basically consolidation and accumulation. It's pretty hard going for the most part, because some people just don't have that kind of patience. You know, some people want to trade and do this for a living. That's fine. Other people, you know, see it for what it is, which is, you know, it's like a relatively easy investment, easy to manage, easy to buy, easy to store, you know, and that's what it is. And that's all I'm seeing here, really. I'm not seeing major bear market, even though we can consider, you know, 20,000, 18,000, 12,000. These are mapped on there for a reason, but you know, if you're not thinking about it on the long term, you know, you're gonna be aging yourself. You don't need to do that, you know. Come on, there's only so much Nivea for men will do for your glowing skin. Yeah, if you're looking at the 1 minute chart, the hourly chart, even the 4 hourly chart, even the daily chart at the moment, you're going to turn yourself into an old person very quickly. At the end of the day, this is a nice area to start accumulating within, which is why I've already done it. And guess what? Lower prices for me are exciting, and I'll be welcoming these dips if we get them. We may not. Remember, we are looking at an area of potential top on the Dixie, and although this, you know, like I say, it's not the be all and end all. You know, this consolidation from the Dixie doesn't necessarily mean that everything goes up, but it would help. The main thing we're looking for is the next rate hike, which is a 50 basis point one. We're going to probably dump down towards that actual event taking place, and then just like we saw in March, a nice rise from the ashes, and that's pretty much what I would expect. We can look at charts all we like, but we can't fool ourselves into thinking that there's more to it than just charts. When Bitcoin is following the traditional markets in the inverse way that they are with the Dixie. You know, we did consider this all last year. You know, it's not anything as a big surprise, which I played that video to you. You know, and that was just one of several videos, especially talking about it on the live streams throughout on, you know, the Patreon live streams. You know, we were talking about this for a while. You know, when everyone's talked about the dollar dying and things, it's unlikely that the dollar will die. It won't be allowed to die, because inflation is a worse problem than you know, a temporary pullback in stocks and whatever. So we're not looking for stock market to crash. We're not looking for inflation to go crazy. We're looking for the waters to calm, and you know, that can take time. Just as we saw on Bitcoin's chart in you know, from 2019 through to 2000, well, I suppose end of 2020, we had an 18-month period of consolidation and accumulation despite this black swan event. So if we just draw a little line in there and pretend that never happened, effectively it was just down and sideways and choppy. And guess what we're doing now? We're down and we're sideways and choppy. So I wouldn't get too concerned, like I say, and like I say, if you're finding, you know, boring price action hard to cope with, then maybe this isn't for you. You know, these are the testing times. You know, it's not about getting rich quick, it's just about getting rich. You know, you can get rich relatively quick in the grand scheme of things. You know, over a few years, certainly you can get rich. But are you looking to get rich this month, next month, or, you know, a few months down the line? It's probably not going to happen. But taking the opportunities that are presented to you at the time can lead to getting rich. Although there's always risk, obviously. Right, I'm going to go now before the kid wakes up. I've got some stuff to do, but I hope you have a nice day. Take what I say on board. You know, it's not, no one knows the bottom, no one knows the top. But we're looking to take advantage of effectively what is still a spring sale for Bitcoin. And even though I am expecting lower prices, you know, I'm not looking to sell anymore. I am looking to only buy. Yeah, dollar cost average, or effectively just rebuys from selling from around the 52 to 54,000, which is my last Bitcoin sell. Sold over here. We buy them back incrementally. The lower we go, that's the best way to spot trade. And guess what you'll be doing? Selling incrementally on the way up. But all these levels, I won't be looking to sell any of these particular levels. I'll be selling higher, much higher than where we are right now. And you might think, well, that's unrealistic. How long are you going to... Look, not selling today, not selling tomorrow. Look, it could turn around as fast as by the end of the year. Either way, you'll look back. You will look back and go, oh, of course. Why didn't I buy when we were... Because this is where it's going to be. It will go up. You know that, right? There's many charts outside of Bitcoin's chart which only do go up, Bitcoin is one of them. It will only go up. Is it going to go up today? Probably not. I think we go down before we go up. But don't be afraid of taking the opportunities that are presented to you quite clearly, which is, you know, this is down from its previous high. Matt Damon would love these prices. Anyway, that is it for me. I'm definitely going to leave it with you before I get in on the old Matt Damon stuff. Alright, take it easy, guys. Have a good one.